So let's see if Mr. Shilio is on the line. Let me sure my stuff's turned on here. All right, Mr. Shilio.
Hey, Alex, how are you?
Real good, man. How are you doing?
I'm doing well, thanks.
Awesome. So talk about your week, brother. Tell us what you wrote and the numbers that you put up as far as appointments and so on.
Okay, well, I had booked 6. I had 2 reschedules and I sat 4. I was able to close all 4 and do a double in one home. So I got 5 apps in total. One was actually an application for a face increase, which is an additional $508 in AP. And then 4 new apps. First one was a strong foundation, 20-year term. Client just wanted straight up protection, wasn't interested in permanent insurance or cash value, just wanted 20 years of coverage. So that was what worked for him. So we got that set up, or in the process of getting that set up for him. Then I did a couple for mortgage protection, and we went through the different types of insurance. They were not interested in term. They were not looking for something that was temporary. They wanted something permanent. That was guaranteed that was going to be there when they actually needed it, and they liked the idea of some cash value available that they could access in their retirement years. So we did a smart UL for each of them. That was what worked out best. Whole life was a little bit much. The smart UL was a little more cost effective and worked well for them. So did 2 smart ULs. Then I had a request from Foresters through Vinny for a current client where the agent was no longer active out in Long Island, which is not my territory, but I went out there and took care of somebody and did them they had a $100,000 smart UL with us with Foresters through one of our agents, and I was able to get them an additional or set them up for an additional $35,000 of Advantage Plus whole life. She liked, she said nobody ever took the time to explain to her how the universal life worked. So I showed her that, and I showed her the second option being Advantage Plus whole life for a permanent solution for her. And she liked the idea of the growth that you could achieve with Advantage Plus and with the dividends and the cash value growth. So that was what she preferred. So I wrote that for her. So all in all, 4 new apps and 1 base increase. That was my week.
That's great. Good job, dude. That was excellent numbers. So you, you booked 6 and you sat on 4 and you closed all 4?
I closed all 4, and like I said, 1 was the husband and wife. So I got 2 apps out of that set.
Yeah, absolutely. Closed. Okay, got it, man. That's great.
Mm-hmm.
So what I love about your approach, and this is what Jonah Bedman was talking about when he talking about the Eric Belair approach, where Eric Belair does what Vinny does, which is explains term and permanent insurance, and then lets the client decide, which one they'd like to, pursue. So why don't you talk through again how you do that, how you introduce that concept to them in your appointment process, Vinny?
Well, I take a look at what they had requested. If it's a mortgage protection, obviously there's nothing on there. If it's a direct mailer, but if it's a speed lead or a call-in lead, and they had specified a certain type of insurance, I'll ask them, tell me a little bit about why you want this type of insurance. What is the purpose of the insurance? And generally, they're not really too sure. They don't really know the different types. And I'll say, so you're not really familiar with the difference between term, universal life, whole life, et cetera. And they said, no, not really. Most people don't know. They hear the word term because that's what's pushed out there by all the commercials and the big companies in New York. Term. So that's what they put on there a lot of times, and they really don't understand what term is, and that it's not permanent, it has no cash value, and it will end at some point, and they could actually pay a lot of money and walk away with nothing. So I take the time to explain how term works, how universal life works, and how participating and non-participating whole life work. And then I go back to them and say, well, based on what we just discussed, which type of insurance would you be interested in looking at that you think would be right for you? And generally people, once they understand how term works, they don't want it. There are some people, like I said, I had the one client on Thursday that was only interested in 20-year term, and explained to him that it was temporary, that it had no cash value, and that it may not be there when he needs it. I also did explain to him that it is convertible, that if he does choose to at some point, either by age 65 or prior 4 years to term end, whichever comes first, he's able to convert that to permanent insurance at his attained age. I said it's going to be more because it's a permanent product and you're going to be older, depending on how long you wait, but you do have the option to convert that if you feel that you decide you want something permanent that's going to be there guaranteed when you need it. So that's basically the approach I take with clients. I ask them what they know about insurance, the different types, and if they don't know anything, which most don't, I take the time to explain that and give them an education, basically saying, how did you make a good decision about what's right for you if you don't know how different types of insurance work?
Okay,
and that's the way I go about it.
Okay, great. So that's a great outline. So you set them up with that question. So we got a lot of brand new people that were getting started, and I can't even believe how many new people are going through the boot camp right now. I'm very fired up about that.
Awesome.
So what I'd like for you to do is pretend, I'm the client, and then do your spiel on me explaining, the difference between those products, just what you typically do with anybody you sit down with.
Sure. All right. So Alex.
Yeah.
Alex, how you doing? This is Vinny. I'm calling about the information you had requested for term insurance. Oh, okay, yeah, okay, right. You say yes, yes, yes,
yeah.
And I'll say, okay, Alex. What was it that you were looking to do with term insurance? Do you understand how term insurance works? Tell me a little bit about what you want to do.
Is this in the appointment or is this on the phone call?
This is just on the phone.
Okay.
If I'm on the phone with them, in other words, if they specify a certain type of insurance on the lead, I will ask them a little bit about that.
Okay.
Right. So, that's just kind of getting to understand what it is they're trying to do. Is it you put down final expense insurance, or they put down term insurance, or whatever it may be. I'll ask them a little bit about that. It's on the phone.
100.
And then when I'm in the appointment, I'll go into it in more detail. I'll say, okay, so we'll explain that to you. We'll go over the different types of insurance. We're going to see what works for you, and we'll find something that makes sense for you, that helps you accomplish your goals, and that makes sense for you budget-wise, financially. And then when I'm sitting with them,
yeah,
I'll say, hey, Alex, let's talk about different types of insurance. We touched on the phone a little bit. Let's go into it in a little more detail. So what are your goals with the insurance? What are you trying to accomplish? Who do you want to protect?
Okay, so then, like if it was let's just say a mortgage protection lead, I would probably say something like, well, I just wanted to see what it would take to make sure that my house is paid off if I die.
Okay, so is it somebody in particular, your spouse, your children, family members, siblings?
Yeah. Jenny, my wife.
Okay.
I've got 5 kids, so, definitely something I want to look into.
Okay, so we'll go through your situation. We'll kind of do a little bit of an analysis. We'll see what you may have in place. We'll see what your exposures are, and then we'll find something that makes sense for you. So what do you know about the different types of insurance? We talked a little bit on the phone. You said you're interested in term. Do you know how term works? Do you know how universal life works? Do you know how whole life works?
I've just heard term insurance. That's all I really know. I know is, not much.
Right, and that's fairly common unless you're, in the business. Most people don't really know about the different types of insurance and how they work. And term is the the term that you hear a lot on ads.
Yeah,
So the
right.
term, right? So let me explain that to you. Let me explain how that works. So term is a temporary insurance product. It can be anywhere from 10 to 30 years generally. There's no cash value in term. It's pure protection. And when it ends, it ends. You'll have no coverage at that point. It may or may not be there when you need it. If you have a 30-year mortgage and you only qualify for a 20-year term, that may or may not be the best solution for you. It is the least expensive type of insurance. And I always throw in, and you taught me this, term is like renting insurance. And then there's other options that have permanent insurance that have cash value that are guaranteed that'll be there when you actually need it. Term may or may not be there when you don't, when you actually need it. So, again, you kind of convert term at some point down the road if you want to change it over. If it's affordable for you now to start with a term, that's fine, and we can convert that to permanent insurance down the road at your attained age. Then Universal Life is a flexible program. Has flexible premiums, flexible face values. You can tailor it to your needs as your life changes. With your needs for insurance will change. You may need less when you start out in life. Maybe you get married and you need a little bit more. Maybe you have some children, you need a little bit more. Maybe you buy a house, you need a little bit more. Then maybe down the road, your children are grown, they're out of the house, your mortgage is paid off. But you still want a little something so you can drop it back down, and your premiums will go up and down accordingly. You have the opportunity to pay more or less depending on your situation. You can overfund Universal Life to create a tax-free retirement income availability in your retirement years, and I'll show you how that works over an illustration to show you how that works. So Universal Life gives you a lot of flexibility. It gives you cash value. And it gives you a permanent insurance product that'll be there when you need it, as long as you fund it properly. And I'll show you what I mean by that. The third type of insurance is whole life. There's two types, participating and non-participating. The only difference really is that participating whole life is eligible for dividends. Dividends are not guaranteed, but when a company does well and they declare a dividend, they share that with their policyholders. And I'll teach you, or I'll show you on an illustration how you can use the different types of dividends. And non-participating whole life is the same. It just does not grow. It does not get dividends. You don't have that dividend option to reduce a premium or grow your face value or to get a check, at the end of the year when they declare a dividend. So, and we'll go over those different types. What do you think you might be interested in looking at based on what I just described to you?
Well, I'm more interested in something that's going to be around when I need it.
Okay, so let's take term off the table, and let's take a look at universal and whole life. Let's do the analysis of what your exposures are, or again what you have in place and all that, and then we'll take a look at both. We'll get a starting point to see if we can land in the ballpark. I'll run you three numbers of each, and we'll take a look at them, and we'll review the illustrations online. I'll show you how they work, and then we'll narrow down to what is the best fit for you. That's pretty much what I do.
Okay, so in the process of the analysis, what are you showing them as far as the universal life and then the participating and the non-participating? I assume that the non-participating is like plan right, and the participating is
plan right, and and Transamerica Solutions. Yeah, the final expense products.
Yeah. Okay, so in New York, you only have three companies to work with. So Transamerica,
correct,
is the non-participating whole life, and then Foresters is the participating whole life.
Foresters has both. Plan right is non-participating, and Advantage Plus is participating. Right. So, and it basically comes down to, once we start doing the analysis, we're seeing what their financial situation is. But what kind of steers me, if we're looking at a whole life product, to whether it's going to be Advantage Plus or Plan Right or Immediate Solutions, is their health. And Advantage Plus has got a stricter underwriting. Those non-participating whole life programs have much less strict underwriting because they're designed for final expenses for folks that are 45 to 85 and may have some health concerns, maybe on some meds. They may not qualify for a Smart UL or an Advantage Plus or even a term, which the underwriting is a little more difficult more difficult to get the policy placed. So based on their income, what their exposures are, what they have in place, what their goals are, what they're trying to do, and where they land health-wise, that kind of helps me figure out which product is going to be right for them. And then we run, like I said, 3 numbers, like we standard, would do, in any presentation. We sit down with a client, we give them, okay, A, B, C. Are we in the ballpark here? Which one do you think would be the best fit for you? They'll point to, whichever one they think, or they'll say, hey, well, that's a little too steep, or, hey, I can do a little more. Can we look at a little more than that? And they'll tell you which way to go. But you have to have a starting point. You got to be able to figure out what are they going to qualify for, what's going to help them achieve something toward their goal. Most people say, well, the mortgage protection, I got to have, the whole mortgage covered. You may or may not have to. Who brings in what in terms of income into the house? Is it 50-50? Is it 75-25? Is it 100% zero? That kind of helps me figure out who needs to be covered and at what level. Maybe they need to be covered for half the mortgage each. With their income level, they'll be able to stay in the house. The surviving spouse will be able to stay in the house. If they had check for half the mortgage, they can maintain the other half with their income level. So there's a lot that goes into the analysis to kind of figure out what's going to be right for them, what they're going to qualify for. Because at the end of the day, and then you've said this many times, it's not what you write, it's what gets put on the books, what stays. So you have to make sure you put them in the right product that they're going to qualify for, and that's affordable to them. Because if it's not, and they hit a bump in the road financially, your persistency is going down, down the drain, because they're going to keep lapsing their policies. So it's really important to not only figure out the right product to help them, but what's affordable to them, and make sure you put them in the right product at the right premium for their situation. And you have to back into that. You can't just walk in and say, okay, you have a $500,000 mortgage. You need a $500,000 term policy. Here you go. That's not gonna work. You have to really figure out. You got to do some due diligence and figure out what's going to be in your client's best interest, and present that to them in a way they can understand it. And they can't understand it if they don't know anything about the types of insurance. So you got to really kind of do that first to make sure they understand that as well.
Absolutely.
Yeah.
That's a great summary, dude. Let me amplify a little bit. Okay, you know me, I like to draw stuff out. Right?
Picture's worth 1,000 words.
It is, it really is. And so, so if you're brand new, I don't want you to feel intimidated, but you do have to learn to be a professional in the business. And Vinny is a professional in the business. He took time to study the product so he can really be good. But he didn't wait until he knew what he knows today to get out in the field. So a lot of his experience helped him understand what he needed to learn in order to serve these people. Okay, so I don't want you to get all freaked out. It's like the process of learning is doing and then learning from what you did so you can fine-tune the things that you're running into. We can only prepare you really so much, but what you've heard is how you get started on the road. There's so many different paths, but here's the path of selling value. Okay, it's not closing the sale, it's selling value. Why does selling value, why value selling is important? Well, number one, the only way you can sell value to a client is building a relationship. Okay, now Vinny is like 6'9", or did I?
6'9".
6'9", okay. Mm-hmm. And that's after gravity, and I don't know how old you are, 56. Okay, he's 6'9". So there is actually psychologically, there's an advantage for tall sales guys that do quite well, But in Vinny and growing up, probably are thinking, man, I must be intimidating people, which is good on a basketball court, right? But in a client relationship, so he makes them feel very at ease. He's got this great ability to establish rapport. Now, look, if you can establish rapport in New York, You can establish rapport anywhere, baby. So,
Yes, indeed. And that's so important, Alex, because if you don't build that relationship and establish that bond and rapport, and sometimes I'll talk to a client for an hour or more before I even get anywhere near discussing, the business at hand. And that's so important because, if they don't trust you, they don't like you, they're not comfortable with you, you could, have the right solution for them, give them the best presentation, and they're not going to buy anything from you.
that's right.
So
They
you have to have that in place first. Yes.
Absolutely.
Yes.
Absolutely. So that's what I love about Vinny. He's very good at doing that, and very sincere too. The relationship is not based on closing a sale. It's a relationship based on trust so that you can serve them. The idea is, so how can I serve you? And I can't serve you unless you trust me that I want to serve you with the best product. I'm not looking at you like a paycheck. I'm looking at you as someone who needs my help. And with my expertise, I can guide you. And the expertise of your entire upline, the person you can get on the phone, so the relationship, value selling begins with a relationship. Another reason why value selling is important is that the client keeps what they value, right? The pearl of great price. People will keep their policy if they think it is their gold mine. It is their thing that will help them achieve their goals, not only protecting their family in the event of death, but protecting their family if death should occur, whenever death should occur, okay? Whether it's tomorrow or whether it's 31 years from now, the year after that 30-year term dies, okay? The client will keep what they believe is valuable to them, and they're not going to let it go. And so value selling, giving them something of value. Now, if you're just selling accidental death and whatever you can close, and the client, they're going to just value it as just something to cover them temporarily, but the next guy or the next gal that comes in their house that shows them a more valuable product to them, they're going to cancel your policy in a New York minute, right, Vinny? And then
you got that right.
and then they'll jump to the next pretty pearl that's more valuable to them than the thing you sold them. Now, you certainly have to fit it within their budget, but anybody of any budget can value what they need. How do I know this? Hey, I sell insurance on the west side of Dayton, where the average mortgages are like $75,000, okay, $100,000, in 2019. And they're humble homes, but that home is as important to them as the people that live in Indian Hill, Cincinnati, where the average home values there are like 1.2 million. Okay, so I've sold in both places, and it's valuable to each one regardless of economic status. So I don't care what their economic status is or the value of their home, they want it and need it. And so we can show them, even if they're of humble backgrounds, something that they will value. And in the case, if it's a term product they can afford now, look, the beauty of term is that we have convertibility options, like Vinny said, that you can turn that term temporary product. I love how you say temporary, because that's the best way to put that product. Because if you're going to talk about permanent, it's good to talk about term as in temporary. Okay, who wants something temporary? Like, do you want to have a temporary marriage? Do you want to have a temporary relationship with anyone? No, man. You value something that's permanent, don't you? So I love how you put that terminology in there about temporary. This is temporary insurance. That's so great. I love that, dude. So you can, it doesn't matter, but they're going to hold on to that thing, man. They're going to clutch it. They're not going to let someone come in. And I respect that too. So when I go into a client's home and I see that they have a solid permanent product, gang, I am not going to replace it. I think that, because I believe in it so much, that if they have a great policy that I can't put them in a better position, I'm not going to replace it. I'm going to talk about how we can add to the value of what they're looking for, okay, with my products. But look, I'm not going to replace that. So you have to maintain the integrity of what you want to accomplish with a client if they already have something that's a really strong program. And I compliment them all the time on that decision. What's another important aspect of value? Number 3, a client will sing your praises. Equals ERS referrals, any regular referrals. When you did a good on somebody, when they feel like, wow, I thought I was just buying something that would just cover the mortgage, but now I got something of value that can potentially give me back 3 times what I paid in premium, and it's something that will be there no matter when I pass away, and that the value of it increases over time. Man, who's not going to want to share that with their friends? It's like finding gas that's 10 cents cheaper in this gas station. You want to say, hey, dude, Patrick, man, you can get 10 cents cheaper a gallon at this station. I don't know how long it's going to last. You know, or you see a good movie, it's like, man, you have got to see Captain Marvel, a strong female hero I'd love my daughters to model. You know, I mean, it's infectious. Good things are infectious.
No, Alex, if you do it right and you take care of the client, you don't even need to ask for referrals. They ask you for, I had last woman, and can I have a half a dozen cards? I want to give it out to all the people in my building.
Great.
Yeah, it's amazing how, you know, if you really help somebody and take care of them and do the right thing for them, how that comes back to you. And it makes it really hard to replace your business.
Yeah.
Anybody can replace a term policy, you know. It's very hard to replace a good whole life or universal life policy that you do. If you do it properly and set them up with the right product for their situation, it's very hard for somebody else to come in and steal your business.
You know,
so you're protecting your turf, you know.
It is. It really is. You are. It's like, you know, Joe, what you're putting in here is you're putting money in the bank. You're putting money in the bank in this product, and it's earning you an interest rate over time that'll be there for the rest of your life. And if another guy or gal comes in here, what they're doing is they're taking all that money out of the bank, and you've lost the equity in this product. You'll have whatever cash value will still be yours, but you lose what you really wanted. You just stole your opportunity to build this thing over, you know, the long run. It's like someone, you know, stole your house. You know, it's that protection that you have for your client that they will keep. It's absolutely true what Vinny said. Hard to replace. So what you've done is you created, you know, this wall around that policy that's hard to overcome. Anyway, great job. And then when you've given them something of value, more leads to annuity opportunities. Because look, if they can trust you with a value product like an IUL, Index Universal Life, that they can add value in, then they can trust you with their money. Like Vinny has written annuities because of that relationship he's developed. And they look at him as their insurance professional that has given them something of value. Why shouldn't I trust Vinny with my annuity money, right, Vinny?
Actually, it's funny you say that, because the couple that I wrote the Smart ULs for both have Oppenheimer funds that they're not too happy with, and they're saying, let's get this taken care of, and then I'd like you to come back and take a look at an annuity for each of us. So yeah, it's very true. Absolutely very true.
You know what? And I did not know that. But I know it is true. And then Vinny backed it up. Dude, we didn't talk before this call, did we?
No, I never mentioned that to you.
I know.
No, just that's, as I said, it's just coincidental that you make that point, but it is absolutely true, and it did happen to me this week. So
the thing about what I love about Vinny too is that he seeks quality sales. He's not after the wham bam thank you ma'am sales that drop off the books later and that doesn't do anything for anyone, especially the client. But then as you, the insurance professional, does nothing for you in terms of your income. Quality always begets long-term opportunity, right? And value is quality and the quality of the relationship. So Vinny's all about quality. He wants to do the best for the client, right? And so all this is doing the quality sale, the value sell. Man, this is very timely, Vinny, because I'm really needing people to understand that big time. So let's kind of cover, kind of the products that Vinny's talking about that you have to, you must, if you want to be a professional in this business, get smart on. And it's nothing other than going through the training at Alliance University for each of these products, digging into the product guide. It's amazing, Vinny, isn't it? How much information's in the product guide if you read it.
Oh, absolutely. They're all laid out, the underwriting standards by company, and that's important to understand because each one is a little different. Like when you're doing a final expense, that Foresters is more friendly to insulin use than Transamerica, where Transamerica is more friendly to respiratory ailments like COPD.
Right.
They don't worry about things like neuropathy or you'd be graded with Foresters. So you can get better insurance classes with different carriers based on their underwriting standards, and you have to know that to be able to put your client in the right product. That's so important. And it's something you learn over time, and by doing it, it doesn't happen overnight. And what you said earlier is absolutely correct. New agents starting, when I started, I knew none of this. And, I leaned on you and Karen. Karen's outstanding fountain of knowledge, and she's awesome, and she's always available no matter what. And between the two of you, I learned so much. And the carriers are a great resource as well. They're more than happy to educate you on their products because they want you to sell them. So they're there for you.
Absolutely, absolutely. So if I would suggest the products to get smart on, this is like after this call, go immediately to Alliance University, okay, and find those Alliance University courses, which are free. You don't pay anything for them. Okay, even when you get to the checkout, it'll be $0, and that's how you access the training. Okay, and these are not long. They're like maybe half hour, 20 minutes. They're not long, but they give you the basics. And then you would go to the ARC website and go under the carrier page. And then when you get on the carrier page, it's got a ton of materials that you can click on, like the product guide and the underwriting guide. And it's a very simple thing. Watch the Alliance University videos and then go to the carrier page and download the products, okay? So here's the term. We'll call it TEMP, temporary insurance. Okay, I love that. I love that so much. Then here's universal life / index universal life. And then here's whole life, participating and non, okay? And we've already talked about them, but let me just give you just quick and dirty what to start with. Forrester's strong foundation for the term. If that's in Florida, New York, they only have Foresters, they don't have CFG. But CFG, simplified issue term, for states that you can do CFG. Those are like our main go-to products for simplified issue term. Okay, simplified issue term. So they don't have to go through a blood and urine test. All right, so get smart on those. For UL and IUL, you've got Forrester's Smart UL. All right, and that's like the UL that's, I think, is one of our most solid universal life products. Okay, then I'm going to make it simple. I'm not going to have you run down the rabbit hole on 20 different products. You will get smart on the other ones. There's like, this is Alliance 101. This Alliance 404 are other things. I'm not going to cover this. Okay, just you're brand new. Alex, what do I need to focus on? I'm going to let you focus on these so you can immediately start selling value. So you got the Forrester Smart UL, all right? And this is the UL. Now, dotted line, for the IUL, I'm going to give you one that's very simple, okay? Like if you're in New York, the National Life Group, actually anywhere, Flex Life 2, okay, that one, okay, then there's the other one.
He said you wanted to be fresh. He said you ain't like Tanya gonna belt Bart.
Hey, Tanya,
I'm
can
sorry.
you please mute? Okay, all right. Thank you. Oh, I just muted Vinny. Oh, well. Okay, I got Vinny unmuted. So IUL, particularly if you're in New York, National Life Group, but wherever, this is a really strong product. And then the other one, there's really two that we focus on. And these are the two for IUL, Index Universal Life. F&G Life Elite, okay? There are advantages for each one, but if you want to get smart on the IUL, it's one, pick one. All you do is just pick one. Just pick one. You don't have to go do both, but this is either or. For New York, NLG Flex Life 2. Whole Life, okay, participating. The only one that I know of, Vinny, I'm not sure of the other carriers that do participating. Maybe Andrew can text me. But participating, the one that I know of right now, let's just do one. Forrester's Advantage Plus Whole Life. And here's what's interesting is the Advantage Plus Whole Life is on the same paper application as Strong Foundation because they virtually have the same underwriting guidelines. So whatever they can fit underwriting-wise in Strong Foundation, they can fit in Forrester's Advantage Plus Whole Life and Forrester's Smart UL, actually. All three use the same paper application. That tells you something. So really, you know, the simplicity of understanding the underwriting guidelines for Forrester's will cover three different products: Forrester's Advantage Plus Whole Life, Smart UL, and Strong Foundation, okay? And then non-participating, you got Forrester's Plan Right Whole Life, and then you've got the CFG Dignified Choice for non-participating. So these are you know, the basics. Now, of course, we have our, let's put it in this box. Let's extend this out here. Okay, the guaranteed issue. So if they're really sick, okay, and unfortunately we don't have that in New York yet, but Great Western Insurance Company, you know, that's really the go-to product for those states that have that. The states that don't would be AIG. Okay, so, you know, I lean towards Great Western, but if you can't sell Great Western your product, then it's AIG. So again, this is one or the other. I wouldn't recommend doing both. So this is really the map of what you need to get smart on when you want to go through the value selling aspect of what we do, all right? And so Vinny's really good at having them decide what path they want to walk down, because they feel that they will get more value from that path. And then within that path, okay, if it's this path or this path, then he shows them three options relative to the product that, you know, that is the one that you feel more strongly for the client based on their underwriting, based on their health, and what they can fit into in the underwriting, all right? So this is sort of really the map of what you really got to get smart on. And you can get smart on, you know, every week. And what we used to say when we first got started is, and we learned this from other insurance professionals out there, is that pick one day where you focus on product training. And for a lot of people, they focus on Friday afternoon. Yeah, I guess maybe that's old school mentality when they would work Monday through Friday, and then the insurance guys would go to the bar on Friday afternoon just to, you know, power down from a week of selling. Okay, that's not our way. our ways to use our time effectively. So sometimes Friday afternoon, people power down to power up. And that is they spend 2 hours, 3 hours on product training. That's all they do for 3 hours every Friday afternoon. That time is dedicated to learning their products in detail, running the softwares, particularly when it comes to Universal Life and Index Universal Life, running the software so you can understand what to show somebody. I'll tell you what, right, Vinny? Nothing's more powerful than clicking the button on an illustration and then showing the client their eyebrows go up, don't they?
Oh, absolutely. And that's what I always say to them, you can explain something to somebody, but when you actually see it on an illustration on a laptop and you're able to follow along and understand how the product works, that's what makes it click for the client. So they understand. They say, hey, this is something that I want, or no, this is not what I'm looking for. And then you go to plan B. Okay, if you're not interested in that, let's look at this. Then maybe this is better for you. I'm doing what you're just talking about now. I'm still learning the National Life Group Flex Life 2 IUL. We never had one in New York, and we just got it at the end of last year.
Yeah.
I have not found the right client to write one yet. I feel good about two clients that I'm going to see Saturday. They live in a very affluent area in Westchester, which is one of the requirements. You really need to have some financial means to do an IUL. Obviously, you have to be able to qualify for it. This is a young couple. They're 34 years old. They have a $750,000 mortgage, so they are very, well-to-do financially. They're in, like I said, a very affluent area, Mount Kisco, in Westchester County in New York. And I think this might be my first, IUL. I'm just making sure I've been running illustrations, and I'm actually going to give them a call later on today and run through the scenario with them. I think they could probably do the express underwriting because they're young and in good health.
Yeah.
And they have the means to do this. And I can show them the value of doing an IUL and saying, listen, you guys are in your 30s. Take a 30-year term, cost you this, but you're going to be then in your 60s with a life expectancy of about 80, and you're going to have no insurance coverage. And you're going to have to pay a whole lot more to get some coverage in your 60s, and maybe you don't qualify. Maybe something happens to your health or whatever, So I'm going to show them the value of doing the IUL. Hey, listen, not only is this going to cover your mortgage, but look at the amount of cash you're going to have built up in this product when you mortgage is paid off, when you retire, and then you have supplemental retirement income aside from what you're doing with your job, or however you're setting up your retirement program. This can be in addition to that, and this is tax free to you, unlike all the other retirement programs out there where you're going to pay taxes on them because you're tax deferred. When you take that money, you pay taxes. Cash value life insurance is the opposite. You don't pay any taxes on. You're paying your premiums with after-tax dollars, and it's tax-free to you when you take that money. So it's a great way to show them value that not only is this product going to accomplish your goal, which is to protect your family, your home and family if something were to happen to you, your mortgage, but this is also going to set you up with cash value that you can use for your supplemental retirement income tax-free. So I think this is Saturday, if all goes well, I may be writing my first, my goal was to write my first IUL with National Life Group. Not because I want to write an IUL with National Life Group, because I think this is the right couple for it.
Yeah, absolutely. The way you described it, I got goosebumps, because that is exactly the couple that need to see this. The beauty of it, of Index Universal Life, is like having a bank account at an insurance company that you're buying insurance, and then they're setting money into an account for you that grows tax-free, that you can access tax-free in the future. And you'll always have the life insurance part. And at their age, when you can show that money growing and compounding over the course of, 40 years, 30 years, then the numbers are insane. You're talking millions that you can put in there. And they're like, their brains are going to explode. So, dude, man, that's good stuff. I couldn't wait to get to this opportunity to drill down on how you approach people on the value. We kind of did it in the past, but I want to drill down on it and then educate people on the products to get smart on. Now notice, Vinny's got an appointment coming up, and he is cramming and learning and practicing the illustrations. And by the way, the illustrations can be done online on a tablet. You know, you don't like per se need a laptop. You can download the software, but as long as you have internet access, you can do it on a tablet by going to the company websites. They both can be, illustrations can be done via their web application to run the illustrations. So, you know, don't feel like you got to download the illustration software on your laptop. It does help because sometimes you don't have good internet access, you know, in a remote area, okay? So it's good to actually have it on your laptop. But if you're running by tablet, this is absolutely something you can do, okay? So anyway.
You know, the other thing, Alex, on that is,
yeah, please.
is National Life Group has great living benefits, and that's another thing that you have to really stress to your clients, the value of the living benefits, that, you know, if something happens to you, you have a source of funds to take care of your medical bills, your doctor and hospital bills, while you're alive. And it's so important to have that now. More and more insurance companies are offering this because it's a great value-added selling point to the client. You know, the number one cause of bankruptcy in the United States is medical bills.
Yep.
And when you tell people that, and they realize that, oh, you're right, absolutely, you know, and that makes a lot of sense to show them something with that extra living benefit that adds value to their, you know, to what they're buying.
Absolutely, man. Absolutely. Well, Vinny, thank you so much, man. You rocked it. I know everyone on this call is going to benefit from what you've already done. So, man, rock on. Thanks for serving the team. And gang, man, let's do it. I've never seen this many, well, I have seen it before, this many unique writing agents submit business this week. Let's keep it going. For those of you that submit your first policy, let's keep the momentum going and put up numbers next week. I know you can. And for those of you that are brand new, that are just getting started, let's get started now, and let's get you writing insurance and helping and serving a family. So let's figure out your leads and how to get a hold of them, and then start dialing the phone. So rock on, gang. Appreciate you. Let's do this thing. Take care. God bless.
Thanks, Alex. Have a great one.
Okay, you too, Vinny.